Hi, I'm John Alexandrov. I'm here today with Bob Kalagher, who's the president of REIC Mortgage. And today we're going to talk about reverse mortgages. You may have seen television commercials lately, featuring these famous actors, and maybe you've heard some advertisements on the radio about reverse mortgages. But Bob, I find for the most part that the general public really hasn't been that educated as to what a reverse mortgage is, and sometimes they get confused as to whether or not a reverse mortgage might be right for them.
True.
So, Bob, let's go through the basics of a reverse mortgage. Who qualifies, and I was really interested myself in discovering that with a reverse mortgage, it's for people who are considered to be seniors, but certainly age 62 these days is not someone who's considered to be a senior.
Really not, no.
So age 62 and older, first of all. Second of all, I was really intrigued by credit scores don't really matter with a reverse mortgage.
They don't. To some degree, we have to check them now because there's a concern about the borrower paying the taxes and insurance on the house going forward.
Right.
But it's still not looked at the same way you would on a forward mortgage.
So, Bob, I know you have this great brochure that REIC puts out, and I'm just going to take a look at some of the qualifications here. And by the way, this brochure and this DVD are available at rossreverse.com. So www.rossreverse.com. So here's some quick answers and questions. Well, I'll let you give the answers, but here's some quick questions. So it says proceeds may be the proceeds may be eligible depending on several factors. I mean, the proceeds being how much money you can borrow.
Right.
Depends on several factors. Your age.
Yep.
And we know it says the age of the youngest borrower has to be 62 or older.
Right.
The appraised value of your home. So in other words, you could have a home that's worth, many people who are 62, 65 and older may have a home that's worth $200,000, $300,000, $400,000,
right,
and either have no mortgage or have a low mortgage.
Right.
So whatever the equity is there, that's what's going to be based on how much they can borrow. Right. Current interest rates, and again the amount of equity in your home.
Right.
So, for example, you're going to do some sort of analysis. Let's say there's $200,000 of equity in the home. Obviously, you're not going to lend the full $200,000, but
right,
you'll do some analysis and lend a certain percentage of the equity in the home.
Right. Well, basically, when they say equity, what they're talking about is appraised value. So
right,
the amount you can borrow is based on the value of the home and your age. And if you have a mortgage on the house, it would have to be paid off with the reverse mortgage.
This one.
Yes.
Right. But the intriguing part about this to me is, once you borrow this money, you don't have to make monthly payments.
No payments.
Now, I think that's what gives people peace of mind, is knowing that, I could borrow $50,000, $100,000, $150,000. I could do some advanced estate planning. I could go on that vacation. I could give a little bit of money to my grandchildren, whatever it may be, and not worry about making a monthly payment.
Right.
So how does the lender get the money back? If people aren't making a monthly payment, how does that happen?
Well, what's going to happen is the interest will accrue over time, and it will get capitalized. And at some point, when both borrowers pass away, either the estate or the beneficiaries of the trust or the will or whatever it is can sell the house and pay off the mortgage and keep the proceeds for the estate. Or if the house is underwater, if they owe more on it than it's actually worth, then FHA would take it, dispose of the house, and the mortgage would be paid off.
So that's fascinating to me. So let's say someone were to borrow $100,000 and they were to live another 15, 20 years. The interest just keeps getting added to that $100,000.
Right.
And at some point in time, then the home must be sold upon the death of the borrower or co-borrower.
Or when both borrowers have left the house for at least a 12-month period.
Okay, so they may go into a nursing facility or move in with their children or whatever it may be. Then the house gets sold, and then the loan gets paid back.
Right.
That's a pretty straightforward process.
It is, and a lot of borrowers are nervous because they're afraid that they're not going to own the house once they do this, but they own it just like they would if they did any other kind of mortgage. The only difference is that the mortgage is paid when the house is sold.
So, and in the meantime, if they wanted to just put the house on the market and sell it like anybody else, they can do that too, right?
Absolutely.
So this gives you a lot of flexibility and a lot of freedom based on what I'm hearing.
It does.
Because you don't have to make a monthly payment. You've been able to borrow the money. You've got the peace of mind of having a nest egg or giving money away to your children in advance of your estate, or maybe even making some investments. I know people do that as well, right?
Yeah.
Yeah. So they could take some money out of their home and even buy some life insurance, for much more than what they're paying, and even leverage their estate a little bit more and get more money to their children.
There's a lot of different options, but leaving the equity in the house doesn't make a lot of sense.
Right. Well, that's the thing, Bob. Depending on people's age and the culture, I know, like, you know, your parents and my parents were probably taught, you know, you pay the mortgage off as quickly as possible, you know, get as much equity in your home as quickly as possible. You know, so then that made a lot of sense, you know,
Right.
for people coming out of certain economic conditions. I know, like our parents, for example, lived through World War II, and they lived through, you know, very difficult economic times. And it made a lot of sense to do that back then. But now, there are some people who may not have as much cash. Maybe they have Social Security coming in, or a little bit of a pension or retirement, but they need more money.
Yep.
And it's all tied up in the equity of their home. And this is probably the best financial tool available to be able to help them financially, have them keep peace of mind, and be able to live the kind of lives they want to lead.
Absolutely.
All right, Bob, so I'm going to mention one more time. You can go to the website Ross Reverse, ROSS, reverse.com. We've got a great video there. There's also a wonderful brochure there. Bob, anyone who wants to call directly into the office, how to do that? Do they do that as well?
They can call toll-free at 888-986-0060.
Okay, Bob, thanks a lot. I know we'll be doing some more videos on this topic in the future.
Thanks, John.